Good evening. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Monday, and we're now at the 15th of March, 2021, 6:30 to getting on to that p.m. Central Time. Before I get into the markets, a few things. I worked all weekend on the online enhanced Bollinger Band course. Probably going to be the best course like this mini version course that I've ever done. It's really in depth, and I mean, I'm basically holding your hand, walking you through each step. That's going to be out very shortly. I have about 5 videos left to do. I got over a big hurdle on the weekend, recorded another video, got the whole outline down, and I'll hit tomorrow the ground running and really be attacking these. The reason I didn't do some of them today, and I want to share this with you, is I told you, for those of you that are in my morning subscriber videos, I'm trying to find a way to get these out even earlier. Now, don't get me wrong. I put out the morning subscriber video. I start recording at about 5:40 in the morning, but sometimes it doesn't get out until after 6:30, up to 7 o'clock. Well, for me, that's too long. Tomorrow, we're moving to our big computer. So we have one here that's quite powerful. For rendering, we built it for rendering. So I'm going to record on one computer. I've never done it before. We're going to render on the other. We render these videos that you see me doing here on those. They go like that. But my other video I never have, and we had to figure out a way to do it. And it's not as simple as it sounds. Different pieces of software from everything. We think we have it. We spent all day today working on it. We got it down. So I'll know in the morning. The last thing I ask is, if you like these videos, do me one favor. Either hit the like button or hit subscribe as you're watching them on YouTube or wherever you're watching them. It helps us. So now let's talk about what this week's going to hold. This is central bank week. You start the 2-day FOMC meeting tomorrow for the Fed. Wednesday, we get the monetary policy statement, hopefully a new set of dot plots, and Fed chair speaking. And of course, we're going to talk about longer-term interest rates, which are now, the market is, in the 1.6 to 1.65 level, back and forth. So we're up there. What is he going to say about it? We then have the Bank of Japan, and I think we have the Bank of England this week also. You've got a lot coming out in central banks. Last week we saw the European Central Bank, and they're opposed. Europe is trying to keep interest rates down. It appears the Fed's content to let our interest rates, the same duration rates, go higher than Europe. In addition, you've got to understand what's going on in Europe to understand what's happening in the markets. Europe's going possibly back into a lockdown. France, Italy, big problems, big problems. They're talking Paris going back into a lockdown on weekends right now. They have not gotten control of COVID-19. We have the vaccines. 20% of our population is getting that. And if you take a look at the amount of states that are just going now and reopening in a big way, it's quite a few of them. We're at different ends of where we're climbing up that hill to be out of this. Very important to understand that. Then we have a lot of news coming out of Australia, New Zealand this week, so you want to watch what that is. So it's a big economic week. Just grab hold of that. In the gold market, the chart's acting like the 1700 level could be it on the downside. You know, I'm not picking a number, but I'm giving you a zone that I think is important. You're churning around in stocks, but the churning is still one where you keep making higher highs all the way through it. And it has still got all the naysayers saying it can't keep going higher, but it does. It's almost like Bitcoin that went up over on the weekend to $61,000 a coin. Yeah, that's a $4,000 sell-off. Dollar fairly stable here, but when you look at things, it's hard not to like the dollar compared to other currencies. Doesn't mean it's going to work that way, but it's just what's going on. So let's go to the charts rather than me talking. On the weekly area chart of closes, as long as you're over the 18-week average in red, you should have a bullish bias to the market. That's what you've got right here. When we look at this action, you came down and up. Even if you set back, you could get what traders will call an inverted head and shoulder. Let me explain this. A shoulder, you could be developing another one. It won't be if you keep going up, but if you backed off right here, it could be. And then you take a high point to a low point, and imagine this, you grab it on a chart and you just flip it over. And it's a way of measuring a count. you'd be up into the 4,000 plus range, 4,100 range. Just pointing out what it could be, not saying it's there. I look at what the chart is, and I will say what is here. You've got a pattern of higher lows and higher highs. That is bullish. You'd have to take out 3,900.75 to break the pattern of higher highs, higher lows. The market is trading over the 18-day moving average of closes. I define bias from where the last trades are in relation to that. When the market's over it, upside bias. Under it, downside bias. Think of it as though as a filter on other parts of your work. So a bullish filter with the swing line up, two bullish elements in the market. The resistance is right here, right at the upper Bollinger Band. For tomorrow, it's going to be around the 3978.5 zone. If you broke through 3,975, 3868 could be a downside target. And in terms of momentum, you're overbought. So you've got two of the three elements friendly, but that third element isn't there. If I take off tonight's reading, you can see you didn't have both numbers over 80. So possibly tomorrow we end up with both numbers over 80. It could be the first day, and you need several in order to get that. So I see what's there, an overbought market with the swing line up, the bias up, but overbought. I next go to the Nasdaq, and the battleground has been right here. The last rally high we had was right at this number, 13,110.50. You backed off. Right now tonight, 13,089.25. I think the pros sold the market right through there. I think they're going to keep a stop where I said. If they take that out, they'll see if they've got anything in the market, because it's been a depressed market, to give it a pop. And if it really popped, wherever that Bollinger Band is right now, it's 13,663, could be a resistance area. If you take that number out, that 13,110.50, that will become a swing line. So you'd have higher lows and higher highs. That would be bullish. The bias would be up at that time, and certainly momentum up. The problem is it hasn't taken out that high. So you're caught in no man's land until it either does or fails right here. In the Dow, we've locked on to what I call that gorilla glue trade. It's when a market goes to the upper Bollinger Band and just doesn't back away from it. It often then, after the fact, creates an embedded reading. This typically leads the market before it embeds. So you have both numbers that I'm not going to count tonight, but both numbers over 80 as of the close today. Both numbers over 80 on Friday, but not the day before. So you had a nice update today. What's Tuesday typically in markets? A reversal day. So a good up day on a Monday is often met in stock indices by a pullback on a Tuesday. If you want to know more about that, Yale Hirsch wrote the Stock Trader's Almanac. It is still in print. It's still being published. You can read all of his philosophy in there. It's quite good. I met Yale and I was impressed. I like things like that. I like to see what the probabilities are, because I'm looking for that all the time. That's what trading's about. So we'll see what goes on there. In the Russell, this market's gone on a vertical price rise. You've just come from a low of 2,082.40, all the way up to 23.54 without a lower low day. Unbelievable. Look at that. Not one day took out the previous day's low. Now, in order to catch a move like that, you had to throw something at the wall. You decided that the Bollinger Bands were the bottom of the market. Whatever. I don't see a trend out of it. I see a lower low, higher high. Definition of a trend, because I do see, you could say to me, Ira, it's making new highs. Isn't it trending higher? Depends how you're looking at the market. I define a trend as making higher highs, higher lows. I certainly see the all-time high. I know what the weekly charts look like. They're better looking than the daily. This is a vertical price rise to an all-time high. Of course, the trend is higher, but not by my definition of higher lows, higher highs. Then we get over to the VIX. And one of the things I was telling traders this morning is I think that in the VIX, the pros might want to sell. I'm talking the pros, write puts at this 1884 level thinking that the market will get back to the 18-day average. You haven't hit one of those numbers. Honestly, it's off the chart. It's got to be 7-8 months. But one of the things that was happening prior to this in last year was when you were hitting those numbers, you were going back to the top moving average. Boom, boom, boom. Why? Because when you drop in this number, you're not going to take it to zero, number one. Number two, the volatility is coming out of the market, and any snap in it where you get a break in the stock market sends the market off to the races as people freak out. Selling it up above that number's a different risk factor. So I'm looking to see if they'll do that, and if they are, you'll hear me talk about it here. In the 30-year bond, are we going to develop an embedded reading? So both numbers tonight are under 20, but that's tonight. Let's go to what the market did on the close Monday. On Monday, both numbers under 20, but not the day before. You're simply oversold in a setup near a lower Bollinger Band in a downtrend with lower bias, but do you want to go through the government report that way? That's the hard thing. You won't get a second chance if the Fed chair says something the market's not ready for. It just moves on you. In the 10-year note, a long-term downtrend trying to embed. You cannot count today. It's 6:30 roughly. How do we know where the market's going to finish? So we can take Monday. That's done. So Monday, both numbers were under 20. The day before, both were under 20, but not the day before. Tomorrow's an important day. We could develop the embedded reading going into the Fed meeting on Wednesday. Whenever we go into one of these big meetings, you know what I tell futures traders to do? Walk away from the market. I go, the odds of you being able to outsmart these algorithms, they're going to react on literally every pause that the chair answers anything with. First you get the reaction off the statement, then they'll say, oh, nothing there, but you don't know it's nothing there. Because when the Fed chair comes out, it could be something there. Everything changes on you. In the dollar index, trend is up, but very overbought. You had a big move to the upside coming in from roughly, let's call it the 89.70 level to 92.5. You need to consolidate that, and that's what the market's doing. First off, you surprised the Forex trade. They were counting on the euro being the strong market. They didn't have a lot wrong. They had wrong the reaction and what Europe's been able to do with COVID. They have not got their arms around it. When you can't get your arms around it, when you tell people they can't travel, they can't go away for Easter, now they're talking in a country, France, where Paris is going to be closed on the weekends into lockdowns again. You think that's good for the economy? That's the difference. We're opening up, they're closing again. And it's not just France. I'm not picking on them. It's throughout Europe. The strain there is not under control. It could be Poland. There's some of the Baltic countries that are having the problem. The point is, it's difference of two worlds, and you're seeing that in the dollar right now. And in the euro, it's the opposite. You're gone sideways, consolidating. You are very oversold, but you're in a downtrend with a lot of resistance over you, and nothing seems to be changing. They've already said from their central bank, they're going to continue to keep rates suppressed. Our central bank, when asked anything, they don't answer. Market just keeps marching higher on these rates. The difference, quite substantial. It impacts currency values. In the British pound, we have a situation of lower highs, lower lows, but it's really more or less sideways action. The bigger play is you've been going sideways. That does not mean that the pros won't, on this pattern, be looking to go short at 139.63, but I have a problem with that. To get there, you're still going to have this pattern of possibly higher lows than the lower highs. Why be involved? I'd like the patterns to come the way they should. You have so many futures markets to choose from. You don't have to be stuck in one. You're looking for patterns. I'd prefer you throw the name off the chart. How's that? So when I look at this, I see reversal. I see momentum got a bit high. You hit the Bollinger Band a bunch of days. You're in a correction. Okay. You certainly aren't looking to be, at least I don't think most traders are looking to be buying an overbought condition. Let it pull back and you'll take another look at it. We're going to be leaving March soon and moving to the next contract as well. In the differential between a Brent and May WTI oil, suddenly the market's in a 25-cent correction. It's not a lot of money, but it is a correction here. It's 25 points. 326 is the neutral number between the two of them. When you go to May Brent, remember, I'm into the May contracts now, and if you'll notice, we're into the Junes and the S&Ps and all those, and currencies. You're overbought. Overbought is a warning sign. It's overbought. It's not embedded. You've been in an uptrend, you hit these numbers, and you stalled out in an overbought market. Period. That does not mean the trend isn't up, but you're overbought. Very dangerous to buy overbought markets. Same in the WTI crude. I consider any overbought reading either of the slow stochastic numbers over 70. So that's what I'm looking at. You had an outside day down today. Now, what about the other market? Outside day down in the Brent. What's our rule of thumb? If you take out the high of an outside day down, the market typically will make a run. That's what my rule of thumb. Doesn't have to work every time. Nothing works all the time. That says you've caught a group of shorts. You typically make a run to the upside. Ideally, you get to the upper Bollinger Band. I'm wrong on that thought. If you take out that high in the next 2 days, in other words, for Tuesday or Wednesday, if you take that out. If you take that out, don't make it to the Bollinger Band is what I want to say, and then get back under that low. You always have to have an exit spot where what you think works doesn't work. I used to be with what I thought was one of the greatest chartists I ever grew up with. He had a flaw, and the flaw was the market had to go to his point. And he couldn't get away from that. And that was it. Did I learn a lot from the man? More than you can imagine. Everybody should have a mentor like him. He's no longer with us, but that was the flaw. It had to go there. Doesn't have to go there. You have to have an exit. You have to have, I'm not right. He couldn't do that. In the Rebob gasoline, I'm watching here. I'd like to see a turn down here where it gets back under the 80 level so we get another opportunity. Why? Because everything else is bullish. You have an embedded reading. You're over the 18-day average, kept hitting the upper numbers here, but like everything else, you get opportunities where people take money off a table. I am bullish as can be gasoline prices going into the spring and summer. So longer term, very friendly. If you lose that reading, you could go back to the 18-day average to regroup. You haven't lost it yet. Last, the nat gas. I think I've been telling you, you're at that funny time of the year when you don't have, I know you're going to think I'm crazy because you have 5 feet of snow in Colorado, and we snowed today in Chicago pretty good today. But, folks, you're at March 15th. We snowed today. We're going to be in the 40s tomorrow. So that's all going to melt here already. Colorado's different. We know that. But we're coming to the end of the winter, the beginning of the spring season that really turns into a spring, and you don't get quite the demand from the cold weather. You'll get pockets of it, but it won't be the lasting part of it. I want to remind you that I put out that morning subscriber video. It's in the morning. First thing, I can't wait for tomorrow to make the recordings and see how long the posting takes. But to find out about these, it's where I say I want you to buy here, sell there. That's where the real meat comes in. You go to our website under the word research. It's all explained there. That's where you sign up and you do everything. I'm Ira Epstein. I'll see you tomorrow. Take care.